If you own a holiday rental in the Canary Islands and you are only looking at the bookings, you are managing it wrong. A full calendar does not mean real profit. More reservations do not always mean more money, and a property that looks successful on Airbnb or Booking be silently losing profitability every single month. Your holiday rental is not just a property, it is a business. And if you do not manage it with numbers, tax planning, cost control, and a real system, you are not building passive income, you are leaving money on the table. In this video, I will show you why most holiday rental owners confuse revenue with profit and what you need to check before your property starts working against you. Most holiday rental owners make the same mistake. They confuse revenue with profit. They open Airbnb, Booking, or their bank account, they see the money coming in and they think this is working. But that numbers is not the truth. That numbers is only the beginning of the calculation. The real question is not how much money entered in your account. The real question is how much money stayed there after commissions, cleaning, laundry, electricity, water, maintenance, insurance, accountants, taxes, replacements, empty days, and your own time. A booking is not profit. A full calendar is not success. Gross income is not wealth. And this is especially important in the Canary Islands because many properties look profitable from the outside, but when you analyze them properly, the margin is much weaker than the owner expected. Maybe the property is fully booked, but the price is too low. Maybe the cleaning cost is too high. Maybe short stays are creating too much rotation. Maybe the owner is discounting too much in low season. Maybe the expenses are not properly documented. Maybe the tax impact has not been calculated correctly, and when all of that happens, the property may be busy, but the owner is not really winning. This is why you cannot manage a holiday rental by emotion. You need to manage it by number. Revenue makes you feel good. Profit tells you the truth. A full calendar can hide an empty profit margin. So, before asking how can I get more bookings, ask a better question. How can I keep more profit from the bookings I already have? Because more bookings are not always the solution. Sometimes more bookings simply mean more cleaning, more message, more wear and tear, more problems and less real margin. The professional owner does not chase occupancy blindly. The professional owner chases profitability, and that is the first change of mindset you need to make. The biggest difference between an amateur owner and a professional owner is not the property, it is not the location, it is not even the platform. The biggest difference is how they make decisions. The amateur owner reacts, the professional owner measures. The amateur owner sees an empty week and immediately lowers the price. The professional owner asks, what is my minimum profitable nightly rate? What is the demand for this week? What is the season? What is the cost of accepting this booking? What is the guest profile? What is the real margin after cleaning, commissions, and taxes? That is a completely different way of thinking. Amateur owners chase occupancy. Professional owners chase margin because the goal is not to have the busiest apartment in the building. The goal is to have the most profitable strategy for your specific property, and that means you need numbers. You need to know your average income per night. You need to know your cleaning cost per stay. You need to know your platform commission. You need to know your monthly fixed cost. You need to know your seasonal demand. You need to know how much each reservation really live in your pocket. If you do not know these numbers, you are not managing, you are guessing. And guessing is expensive, especially in real estate, because one bad price does not feel dramatic. One unnecessary discount does not feel dangerous. One poorly controlled expenses does not seem important, but when you repeat those small mistakes every week, every month, every season, the final loss can be massive. Most owners do not lose money in one big mistake. They lose it through the 10 small leaks every month. This is why you need to stop asking only, how do I get more bookings? That is not always the right question. Sometimes the right question is, which bookings are actually profitable? A 3-night stay may look good, but if it creates high cleaning costs, more message, more wear and tear, and low nightly rate, maybe it is not as profitable as it seems. A longer stay at a better price with fewer operational problems may leave you more money with less stress. This is the mindset shift. You do not want movement, you want margin. You do not want activity, you want profit. You do not want a calendar that looks full, you want a business that works. Hope is not a pricing strategy. If you don't know your numbers, you do not own an investment, you own a guess. And this is exactly why proper tax and legal planning matters, because when you own a holiday rental, the question is not only how much money you make. The real question is how that income is classified, documented, declared, and protected. At Fiscal Tax Canary and Comprare Casa Le Canarie, we help property owners, investors, companies, self-employed professionals, digital nomads, and international clients understand their real tax position in Spain and especially in the Canary Islands. We analyze the structure, the tax treatment, the documentation, the risk, and the strategy behind the activity, because good tax advice is not about improvising at the end of the year. It is about making better decisions before the problem appears. Tax planning does not start when you file the return. It starts when you receive the first euro. So, if you own a holiday rental or you are thinking about starting one, do not treat the fiscal side as an afterthought. Treat it as a part of the business. Now, in the Canary Islands, this becomes even more important because a holiday rental is not only a pricing issue, it is also a tax, legal, and compliance issue. We are not talking about a simple property anymore. We are talking about an activity that may involve EGIC, tourist rules, invoice, documentation, services, platforms, managers, guests, and a real business structure behind the property. And this is where many owners make a dangerous mistake. They say, it is just my apartment, but from a tax and legal point of view, the question is not what you call it. The question is what you're actually doing with it. In tax law, the name you give to the activity matters less than what you are actually doing. Are you simply renting the property? Are you providing accommodation? Are you offering services that look closer to the hotel sector? Are these cleaning services during the stay? Laundry, reception, guest assistances? Who is operating the activity? You, a company, a manager, a platform, or a combination of all of them? Are invoices being issued correctly? Are expenses properly documented? Is the property aligned with the tourism rule applicable to that specific municipality, that specific building, and that specific legal situation? These details matter. And this is why copying what another owner does can be risky. Maybe their property is different. Maybe their municipality is different. Maybe their structure is different. Maybe their services are different. Maybe the tax position is different. In holiday rentals, details change the analysis. If your holiday rental starts looking like a hospitality business, you need to analyze it like a hospitality business. And in the Canary Island, compliance is not a small detail. It is part of the profitability model, because a property that generates income but creates tax risk, legal risk, or documentation problem is not truly profitable. It is simply postponing the cost. The money may look good today, But if the structure is wrong, the problem appears later. And when it appears later, it is usually more expensive. Now, let's talk about something most owners do not calculate properly: the tax comparison between a holiday rental and a long-term rental. Because many people look at the holiday rental and say, I can share more per night. And yes, sometimes you can, but it's not the full story. In Spanish personal income tax, when a property is rented as the tenant habitual home, the landlord may apply a very powerful reduction on the positive net rental income, provided the legal requirements are met. In general terms, that reduction can be 50%, and in some specific cases it can be higher, but that benefit is linked to rental housing used as a home. It is not the logic of a holiday rental. A holiday rental may invoice more, but a long-term rental may be fiscally stronger. This is the point many owners miss. With a holiday rental, as a general rule, you are taxed on the net result without that powerful reduction for habitual housing. And if the activity is structured as a business activity, because of the services provided, the analysis change, but the same key idea remains. You do not get that simple 50% reduction just because you rented the property. So before saying holiday rental is better because I share more, you need to ask a better question. After cost, tax, work, risk, and regulation, which model give me the best real result? Imagine two properties. One is a holiday rental, generates higher gross income, but it has platform, commission, cleaning, laundry, electricity, water, guest management, replacement, furniture wear, reviews, empty days, possible EG analysis, documentation, and more operational risk. The other is rented long term as the tenant habitual home. Maybe the gross income is lower, but the operation is simpler. The income is more stable, and if the requirements are met, the tax reduction can make net result much competitive. The mistake is comparing gross income against gross income. The intelligent comparison is net profit against net profit. And this is why I say that many owners are managing the property wrong. They choose the model that looks more exciting, not necessarily the model that gives the best after-tax results. They look at the nightly rate, but they forget the reduction. They look at the occupancy, but they forget cost. They look at the gross revenue, but they forget time, risk, and taxation. The right question is not, can I make money on Airbnb? The right question is, compared to a long-term rental after tax and expenses, is the holiday rental really worth it? Because sometimes the answer will be yes, but sometimes the answer will be no. And when the answer is no, the owner is not investing better. The owner is just working harder for a worse net result. More income does not always mean more profit, and more work does not always mean a better investment. So, if you own a holiday rental in the Canary Islands, do not analyze only the booking. Compare the models: holiday rental, medium-term rental, long-term rental. Look at the gross income, deduct the real cost, calculate the tax impact, include your time, include the risk, and then decide. Because the best rental model is not the one that looks better on the platform. It is the one that gives you the strongest net result with the lowest unnecessary risk. So, the conclusion is simple. Do not choose a rental model because it looks more exciting. Choose it because the numbers prove it works. A holiday rental may generate more gross income, but it can also generate more cost, more work, more regulation, more uncertainty, and a higher taxable result if you cannot apply the powerful reduction available for long-term rental users as the tenant habitual home. And this is the key point. The goal is not to invoice more. The goal is to keep more after costs, taxes, time, and risk. The best rental model is not the one that invoices more. It is the one that leaves you more. So, before saying holiday rental is better, compare it properly. holiday rental versus long-term rental, gross income versus profit, taxation versus reduction, workload versus stability, risk versus peace of mind. Because sometimes the holiday rental will be the right decision, but sometimes after doing the numbers, the long-term rental may be the more intelligent. And that is the message. Do not fall in love with the platform. Do not fall in love with the nightly rate. Do not fall in love with the idea of passive income. Fall in love with the real numbers, because the numbers do not care about appearance. The numbers tell you the truth. More income does not always mean more profit, and more work does not always mean a better investment. If you own a holiday rental in the Canary Islands, do not wait until the end of the year to discover whether it was really the best option. Compare it property. Holiday rental versus long-term rental. Gross income versus net profit. Taxation versus reduction. Workload versus stability. Risk versus peace of mind. At Fiscal Tax Canary and Comprare Casa Ale Canary, we can help you to analyze your property, your numbers, your tax position, and your rental structure, so you can make decisions with clarity instead of guessing. Because sometimes the problem is not the property, the problem is the model. Do not ask you only how much your property can invoice, ask how much it can really live in your pocket. If you want to review your case, contact Fiscal Tax Canary or Comprare Casa Le Canary, and we will analyze it professionally with numbers, tax criteria, and strategy. See you in the next video.